This is Scott Becker with the Becker Private Equity Business Podcast. We come at you with short business episodes, short private equity episodes, sometimes irreverent episodes, and then interviews with brilliant business and private equity leaders. Today's discussion is 5 concerns in the PE world, and this is based on a Bloomberg talk and a piece from some industry leaders in private equity. And I'll give you 5 clear, signs. The first one is, particularly those funds raised in 2000, 2022, 2019, is declining asset valuations in their portfolio companies and concerns that at some point the auditors will call them on some of these declining asset valuations and not let them book them where they want to book them, but rather where the auditors really think they should be booked. And that would cause a markdown in some of the assets owned by pension funds, insurance companies, and others, endowment funds, private investors, and cause some shocks through the private equity, universe. Second is a concept of shifting towards core value creation, that you just can't do multiple arbitrage and hope that it's going to work out, although multiples may be coming back a little bit as interest rates start to decline. But more efforts towards trying to truly improve operations if you can do it. Third, in the private equity world, and probably far less of a concern than the commercial real estate world, is the interconnectedness between private equity and private debt and bank loans and so forth. Again, many of us are involved with and see companies that if they don't have payment defaults, covenant defaults, and trying to make sure that doesn't become a bigger and bigger trend, and the broader market implications of how it plays into the debt issues as well as the equity issues. The fourth issue that you're seeing as terms of pressure from a private equity standpoint, what we call rising regulatory and investor anxiety, just concerns that investors aren't getting distributions back, that regulators are getting more aggressive about looking at what private equity is doing. And this comes and goes, and again, private equity is easy scapegoat and so forth. And then finally, the last thing that a couple of these leaders spoke about in this issue was the use of different mechanics that kick the can down the road, paying distributions in kind, other efforts, net asset loans, et cetera, things that sort of that don't feel like they necessarily mean that the asset values are still there. And this all comes back to at least declining asset valuations. Are the assets and the businesses being bought really holding their value or not? And not only holding their value, they've got to go up some for investors to be happy about this. They got to beat the S&P, quite frankly, by a decent amount for investors to really be happy. So again, those are 5 anxieties, 5 concerns being faced by the private equity universe. Thank you for listening to the Becker Private Equity Business Podcast.